Hey, it's Ryan here at Real Broker. It is March the 10th. We've got tariff talk and all sorts of changes with the Calgary real estate market, and I will go through our monthly market stats package with you. Now, apologies for the delay. I was in the process of moving, so that's why this wasn't sent out directly at the very beginning of the month, but going forward it will be. And I'll start off here with the inventory levels. So we are up a whopping 76% year over year to 4,145 units. So a big increase. And the most notable aspect of this is that the biggest jump was in properties under 500,000, particularly in the apartment and the townhouse sector. That market used to be very difficult, especially the townhouses, but now it's becoming more manageable. So if you are watching this and you had problems in the past trying to buy a townhouse because there was no inventory or you were losing out to competing offers, now could be an opportunity to look right back into that market, and it's a lot easier now than it was in the past. So that's an opportunity right off the bat if you are a buyer looking for an apartment or a townhouse, and I'll touch on them as we go forward. Months of supply. This number is up a whopping 117% year over year to 2.41 months of supply. Now you have to analyze this a bit better because that's a huge number, 117%, but 2.41 is not that bad. We're going from zero basically to more manageable conditions. So it's not terrible. It's just a big increase over last year. And for buyers, again, it just means things are more manageable. You can take your time. You can view more properties. You don't have to write unconditional offers for the most part. So it's just more manageable. And looking at the months of supply, the biggest jump, again, is in the apartment sector, and that number is over 3 months now. So things are definitely balancing out. Now let's look at sales. We had 1,721. That is down 19.3% year over year. Now this can be a bit deceiving because we are comparing it to a very crazy year. So not as busy as last year or the years before that since COVID, but we're more in line with historical averages. So it's not terrible, it's just not as red hot as it used to be. And in terms of prices, relatively stable. We're at 587,600 as the total residential price, up 0.9% year over year. So I don't expect the prices to skyrocket like in the past. They might just level off a bit, my opinion, but going off the stats, it seems like it's logical. Detached homes, average price 760,500, up 5.1%. Now again, I think this is going to taper off. Duplexes 683,500, up 7% year over year. Townhouses 446,800, and apartments 334,200. Now these are both up 2.8 and 4%. I expect these will be leveling off and possibly even dropping due to the inventory levels, especially the apartment sector. That sector, which I'll get into going forward, has changed quite a bit. And I'll just briefly cover each sector here. And I'll start off with detached homes. So there were 765 sales. That number is down 20% year over year. New listings, 1,267, that is up 6%. The active inventory on the market, 1,698 homes, up a whopping 61% year over year. The sales to new listings ratio is 60%. Now this is the metric that it kind of tells you how the market is performing. If you take the amount of sales in a given period divided by how many new listings there were, it gives you just a bit of a metric of how it's performing. If this number was like 40%, that is a really bad buyer's market. I would say if it's above 60%, it's a seller's market. So we're on the cusp of being a balanced market in the detached sector. And months of supply 2.22, not too bad. But the months of supply is up 100% year over year, which is a big number. And the average price, 760,500, up 5%. I expect these to taper off as we get into this year. Just by looking at the amount of inventory and the declining sales, it would seem like the prices should start to level off. And one thing to note about the detached sector is that the inventory and the prices in the city center and the northeast part of Calgary, you're starting to see more balanced conditions. And then you're seeing less inventory in the northwest and the south part of the city. So it's not all evenly spread out across town. So if you are looking in the northwest, things are a bit tighter. And in the south, same thing. But in the city center and the northeast, there is more inventory and it's a bit more manageable if you're a buyer. And if we look at the semi-detached market, 165 sales, that is down 14% year over year. New listings, 240, up 7%. Inventory, active inventory, 326, up 46% year over year. The sales to new listings ratio is 69%. So this market is still performing a little bit better than the detached sector. And the months of supply, you can see that in this metric as well, 1.98. So there's less inventory compared to detached homes. But that number is increasing though, up 69% year over year, and the average price $683,500. Next up are townhouses. 318 sales, that's down 9% over last year. New listings, 473, up 4%. Inventory, now this is a key one here. We're at 655, up 113% year over year. And so this sector used to be red hot. There was no inventory. There was lineups to see properties as people were looking for affordability, but they weren't really sold on condos. So if you are out there watching this and you're looking for an opportunity as a townhouse buyer, now is the time. It's a lot easier than it used to be. Sales to new listings ratio, 67%. Still pretty good, but it is balancing out. Months of supply, 2.06. This number used to be less than 1 month. That's why it was so difficult. There was just no inventory. But this number is actually up 135% year over year. So it's definitely a lot easier than it used to be. And the average price, $446,800, up 3%. And lastly, apartments. Now this sector has changed quite a bit. 473 sales, down 26% year over year. New listings, 852, only up 2%, but the inventory levels, 1,466, up 90% year over year. So a huge jump in inventory. I've got a condo listing right now. They are definitely quieter than it used to be. Sales to new listings ratio, under 60%, so 56% here. It's technically in a balanced market right now, but it's definitely moving into buyer's market conditions. I can think if this number gets down to like 40%, you're definitely in a buyer's market. Months of supply, 3.1, up 156% year over year. And the average price, $334,200. And my opinion of why the apartment sector is tough is that our condo fees in this city have gotten out of control. Like a buyer looking for a home that's, say, $250,000, they have condo fees that are like $500, $600, $700 per month. Like, it doesn't make any sense to me. My opinion, but that's just, I don't see the condo fees making any sense in Calgary. If we look around the city at the average prices, city center, $589,500, down 1%. Now, I've been doing these videos for the past couple of years, and I think this is the first time I've seen a down arrow. And this number is deceiving, though. If you look at average prices for detached homes in the city center, they are around $1 million. There's just lots of condos in this sector. That's why this number is a bit deceiving. The west side, $706,200, up 1.4%. Northwest Calgary, $646,300, up 1.1%. And the north, the south, and the southeast are all kind of around the average price ranges. $555 in the north, which is down 0.3%. $584 in the south and $581 in the southeast, up 3.2% and up 1.7%. And the northeast, $512,600, up 1.4%. And the east side of Calgary is the most affordable at $432,500, up 2.5%. And I like this side-by-side comparison. It really shows how it's changed over the last year. So if you look at this year, 721 sales versus 2,132 last year. New listings are up just slightly from 2,700 to 2,830. The inventory is the big change, 2,360 last year. Now we're up to 4,145, 75% increase. Months of supply from roughly 1 month to 2.5 months. Big change. Sales to new listings, the ratio was 78%. Definitely hardcore seller's market conditions. Now it is 60%, which is kind of turning into a balanced market. Now let's briefly talk about sales to list price ratio. A lot of first-time home buyers ask me, what price should I be offering? I don't want to offend the seller. What's the standard practice? The homes, they typically sell fairly close to list price in Calgary. If this was last year, you had to offer over list price, 101% versus 99% right now. So we've dropped 2%. And the worst markets that I've seen, and I've been licensed since 2012, were like 2015 to 2020. The market was pretty rough in Calgary. And this number might have dropped down to like 96%, 97% as on average. So the homes typically sell somewhat close to list price in Calgary. Don't expect to be offering $300,000 to $500,000 a property. It doesn't work that way. Days on the market, 24 last year. Now it's jumped to 33 days, which is still fairly fast. This number is up 33%, and the pricing, we already talked about this. The median price was $548, now it is $565, up 3%. And again, I expect this to taper off with the amount of new listings coming to the market and declining sales. You'd think it would taper off, just looking at the stats. And the last thing I'll touch on here is the months of supply. You can just visualize it a little bit better with this graph. So when I first started in 2012, the market was pretty good. It got really good in 2013, 2014. And then the end of that year, we had an oil price crash, and it really affected Calgary. We had a recession from like 2015 to 2020. You can see each year the rising inventory. Definitely buyer's market conditions. Then COVID hit, and then that really transformed our market with lots of migration into Alberta, specifically Calgary and Edmonton. And our market really took off. So the inventory went down, 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 down. And now it looks like it's starting to tick back up. It's not out of control yet. Hopefully it doesn't get that bad. But you can see the trend is changing. There is more inventory coming to the market. Now, what does this mean if you're a buyer? The market is just a lot easier for you. There's 76% more inventory. You probably don't have to write unconditional offers, sight unseen. You can take your time. You can view a bunch of properties. The seller isn't holding all the cards anymore for the most part. Now, if you see something that's in a great location, it's priced right, it's probably still going to sell fairly quickly, but it's just a bit more manageable if you're a buyer. If you're a seller, again, you're not holding all the cards anymore. You have to compete. There's other listings just like yours, most likely, and you have to be priced right. You have to show well, and you can still sell relatively quickly. It's just you have to do everything right, good marketing, good pricing, and don't expect lineups out the door and unconditional offers and stuff like that for the most part. It's just a bit more of a manageable market for everybody. Well, there you have it. That's my take on the Calgary real estate market. Now, if you do want to get in touch with me, if you have any questions at all, go to my website here, ryangillard.ca. If you go to the About section, you can book a call with me. If you click Contact Us, you can write a message here and I will get it. Buying or selling or relocating, any questions whatsoever, feel free to reach out. Call, text, email, comment. I will get it and get back to you. Thanks again for watching, and I'll see you on the next video.